To calculate depreciation, we need to know the cost of a non-current asset. So we're actually going to expand that a little bit and say it's not just the purchase price. So obviously most things are bought at a certain amount, so that would be its purchase or invoice price. Although we do need to factor in if an owner gives the business an asset, we'll just use the agreed value. But what we'll say is the cost actually includes some other things. It includes any cost required to get the asset in a capacity and location to earn revenue, and that cost must last for the economic benefit for the life of the asset. So for instance, delivery fees from a car dealer, installation, getting a computer system installed, or maybe taxes to buy, say, a property from the government are all costs required to get an asset in a capacity and location to earn revenue, and they will provide an economic benefit for the life of the asset. So using any examples, let's say the business buys from another party a vehicle with an invoice price, and obviously that's part of the cost. However, there's going to be some items which will provide an economic benefit for the life of the asset, and they're required to get it in a capacity and location to earn revenue. For instance, a delivery fee. The dealer charges, say, $1,000 to deliver the car to our business. Installation costs, not really appropriate with a car, but perhaps a computer gets installed, or maybe stamp duty or other taxes. They're costs required. We can't use the car until we've actually paid them or incurred them, and they will last for the life of the asset because we're not going to pay them every year. We just pay them once and they last forever. Contrast that with things like insurance, registration, service agreements, maintenance contracts. They're things that, yes, you might be able to argue they're required to get it in a capacity and location to earn revenue, but they don't last for the life of the asset. And in fact, you could say insurance, we actually don't need insurance to start using an asset to earn revenue. It's just something we probably should have. But because they're paid every year, we wouldn't attach them as part of the cost anyway. So looking at an example, we've bought a car and we've been charged $20,000 as a purchase price. Stamp duty, which is a government tax when you buy a new car, of $1,000. Dealer fees and charges, the dealer has charged us $500 to basically drive the car off the lot, and we're going to insure and register it for $800 per year, which are parts of the cost. Obviously the purchase price, that's part of the vehicle's cost. But then we're going to attach anything that's required to get it in a capacity and location to earn revenue that will last for the life of the asset. So we've got the stamp duty and the dealer fees, but we won't put in the insurance. So what we'll say is the total cost is only $21,500, and we'll leave out the insurance of $800 per year. So why did we attach the stamp duty and dealer fees as part of the cost but leave out the insurance? Well, the stamp duty and dealer fees were required to get the vehicle in a capacity to earn revenue, and they'll last forever. We only have to pay them once. Looking at the insurance and registration, is it actually essential to have that before you start using the vehicle? It probably is. You really shouldn't drive a car unless it's insured or registered, but then it's going to fail on the second account anyway because it won't last for the life of the asset. We're going to need to pay insurance and registration every year, so therefore that's not part of the asset's cost. Using another example, we've bought a computer system and we've been charged $10,000. We've had a fee to install it of $2,000, and if it breaks down, we've paid for a service contract for $200 per year, so the manufacturer will come out and fix it for us. What are the costs? Well, we've got the $10,000 purchase price, we've got the installation fee, but we will leave out the service contract, so we'll say the total cost is $12,000. Looking at why we attached the installation fee but not the service contract, well, the one on the left was required to get the vehicle in a capacity and location to earn revenue. You can't use the computer until it's been installed, and it's only got to be paid once. It will last for the lifetime of the asset. The service contract, we actually don't need that to start using the computer. It can actually be used without it. We only need it in case the computer ever breaks down. And secondly, it's not something that's going to last for the life of the asset. It's going to need to get paid every year. So therefore, it's not part of the asset's cost.